Gary Steve here, realtor in the Atlanta area. In my very first episode, I'll be discussing a very crucial topic for anyone who's considering home ownership: how to pre-qualify for a mortgage, especially with high interest rates, fluctuating home prices. This is a very important process. Also, I have a surprise for you. There's a lender I just partnered with that provides a very unique method towards homeownership, but gives the option to also invest and get a return. I'm going to discuss that later. Now let's jump right in to how to pre-qualify. Before we even begin with pre-qualification, I want to talk about your plan. You have to plan your money. You have to plan where you want to go. And there's a difference between having a vision and a mission. A vision is a picture of where you want to go. The mission is how you want to get there. Let me give you a quick example. Chipotle and McDonald's have the same vision. They do. To create quality food in the quickest way possible. Now, what's their mission? How do you get there? McDonald's is doing it through burgers and fries. Chipotle is doing it with a rice bowl, basically a potluck. and they're doing it as quick as possible. Everyone has a different method, but they have to get there. What is your vision and how do you get there? Everyone talks about generational wealth. Everyone talks about investing. How does home ownership play a part into that? What is pre-qualification? A quick assessment of your finances to estimate how much you may be able to borrow for a home. Helps gauge your buying power early in the home search process. That's pretty straightforward. Just tells you how much you can borrow. Whether you're renting, whether you're buying a car, if you're going to get a loan, you have to pre-qualify for that, unless you're going to do an all-cash deal. Now, what's the difference between pre-qualification and pre-approval? Pre-qualification is an informal estimate based on self-reported financial info, like income and debt. I can tell you that, I think I make X amount and I have this much debt. I think I'm worth this and I believe I should be able to obtain X amount in a mortgage. Pre-approval is a formal commitment from a lender backed by verified financial documents that signals you are a serious buyer. So meaning they have to check the facts. You may think that you're worth this, but that doesn't mean that you are. There is one key statement that I heard someone say that always stays with me. It's not how much money you make, it's how much money you keep. So if you're making $20,000 a month and you're only, after each month, keeping $2,000 or $1,000, that doesn't mean that you qualify for a mortgage. You have a lot of expenses. What are the benefits for pre-qualification? It sets a realistic price range and helps focus your home search. Saves time by narrowing down your options and preparing you for the next steps in the loan process. One key thing that most realtors, most lenders will tell you: please be sure that you're pre-qualified. Because if you're pre-qualified, that helps us. Because what happens if you find a house, you like the house, you put in an offer, and then you find out that you don't even qualify? That means you wasted time, resources, and you're gonna have to start back from scratch, and then after examining the real facts, see what you really qualify for. Now, setting realistic expectations for home price availability. This can just be summarized in one thing: knowing what your budget is. Please know what your budget is. A good rule of thumb is that your rent or mortgage should be 25% or less of your monthly take home. What does that mean? If you make $8,000 a month. If you bring in $8,000 a month, your mortgage or rent should be $2,000. If you bring in $6,000 a month, your mortgage or your rent should be $1,500 in order for you to live comfortably. For instance, 25% is your mortgage or rent. The next 25% should be all your other expenses. 25% should be investing into stocks, real estate, or whatever it may be. And the other, I think 10% is your leisure. Another 15% is for charity or something like that. That's a budget. It's straightforward. And you have to put all your expenses into that. So this slide basically just says, know your budget, have confidence in your budget, and based on your budget, making a realistic expectation. You don't want to purchase a home and it restricts you from what you can do. Let's go to the next step. What are the steps to get pre-qualified? Collect essential paperwork, including your recent pay stubs, your tax returns from the last 2 years, a copy of your credit report, and your current debt statements. Now, there are just 4. Your recent pay stubs, you can just ask your HR department. Most HR departments also give you a website or a web portal for you to access it electronically, and so you can print it out for your own records. Your tax returns, you should be able to access it from your tax consultant. The next one is getting a copy of your credit report. I think there's a website called freecreditreport.com. You can get your credit report free once a year. And your current debt statements. Student loans, car loans, anything that is debt, print it out and then provide it to any lender. Contact different lenders. I have various lenders that I work with. The link for those lenders are in this video. Always explore different lenders because they can provide different interest rates. I love my lenders. They're very straightforward. They'll give you a good interest rate. Once you gather all that information, give it to the lender, and you get that pre-qualification letter, you are considered a golden goose. You're considered a golden goose. Not only do you know how much you qualify for, they will give you a rough estimate. Once again, I'm going to say a rough estimate of what your monthly payment will be, and hopefully that will fit into your budget. The key financial factors that lenders will consider is your income, employment history, stability and consistency of your income, your credit score, the ideal credit range for pre-qualifications and loan options, debt to income ratio. Now, debt to income ratio compares how much debt you have to how much income is coming in. I'm pretty sure that's pretty straightforward. How much monthly income goes towards your debt payments, your savings, and cash on hand for your down payment and closing costs. There are a lot of programs that provide 100% financing, meaning there's no down payment. That doesn't mean there's no closing costs. Number 1. Number 2, understand the fees and the structure of the deal for 100% financing. Preparing yourself financially for pre-qualification, reducing your debt, and no new debt. Do not ever get any new debt, any new loans, no new cars. Don't get any credit card debt that you can't pay out immediately. You're going to use your credit card, make sure you pay it off that month. Now build up your savings. I hope you know how to save and save $1. You don't always have to spend. Know how to save $1. Spend $1, save $1. Know how to build up your savings and improve your credit score. There are so many different ways to improve your credit score. Even if you go on Experian, there's a way for you to boost your credit score. There's various ways to help improve your credit score. Here are some important questions to ask before pre-qualification. Why am I buying? Clarifying your motivation, financial investment, personal stability, family needs. I moved out of my townhouse into a bigger house because I had 3 kids and a wife. But I know some friends who don't have kids who want to just really invest in property. You can do that too. But know your why. Understand that. What is my budget? Realistic assessment of monthly affordability considering current expenses. And what are my short and long-term goals? Consider your lifestyle, your career plans, and your family growth. Sit down, answer these questions, and this will help you live intentionally to head where you want to go intentionally. Now, remember the surprise that I told you. Partnered with this lender called Acre Homes. And this is a question that I'm asking you guys. What if you could buy a home and guarantee a return on your investment over time? How? But how, you ask? I'm glad you asked. Meet Acre Homes. Acre is a new way to buy and live in your next home. As an alternative to both renting and a mortgage, the Acre home ownership model empowers you to identify a quality home and get to a closing quickly. Number 1. Number 2, build wealth through your home's appreciation without debt. Number 3, reducing maintenance responsibilities. Number 4, considering options when you are ready to move. Buy the home, cash out, or transfer to another Acre home. Let me explain. Because you're saying, how does it work? Let's say you find a house, and it's a good house. It qualifies. What Acre Homes allows you to do is to lease that property for 3 to 5 years. Let's say if you find a house for $500,000, you're going to choose a model. Let's say you want 5% equity from that house. You have to stay there for 3 to 5 years. After 3 to 5 years, you can either do 3 things. You can either use that as a down payment to buy that house. You can cash out. Or you can use that 5%, at $25,000, if it was a $500,000 home, after 3 to 5 years, and transfer and go into another home. You're building equity. You're getting into home ownership. And once again, they cover the major appliances, the roof, the HVAC. This is another alternative for you to build some level of equity and to get to home ownership. Once again, I'm not here just to say, hey, buy a home. These interest rates are still low at 7.99%. It's so affordable that you could buy 2. I'm not saying that, but I am saying there's ways to get to where you want to if it fits your lifestyle and it fits your vision. I am for the people, I am by the people, and I'm for you. If you have any questions or comments or concerns, let me know. I'm here to listen. I'm for the people, I'm by the people. And I want to see everyone succeed in their vision for their life. Blessings.